Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. It's been a while since I've done any kind of videos. Been gone out of the country for quite a while and I'm back and want to kind of update you again on what's going on. And of course, the thing I think for people in real estate, not just investors, but people looking to buy their forever home or whatever, interest rates are really always number one. It's the thing that we care the most about and has the most effect on what we're going to be doing, especially with investors, mainly because we're looking for cash flow. We want to cover our investment, see appreciation go very, very strongly, hold the property for a while and make money, when we sell it, or reinvest it with a 1031 tax deferred exchange. But, what's happened is the economy is just too darn strong, guys. I mean, I know it's not strong for everybody. I understand that. But, when you're estimating 200,000 jobs last month and over 300,000 are created, it becomes a problem with the Federal Reserve in terms of, lower interest rates are going to stimulate the economy, and that leads to inflation. What they're finding right now is inflation last month was 3.5% from 3.2%. So they have this 2% target. I don't think they'll ever get there, but that's the target at this point. So we started out earlier in the year with 3 reductions, starting maybe in March. Now we're down to 2 reductions, and we're also down to maybe September as the first one. So what happened after these numbers came out on inflation, and after the Fed were talking about the fact that it wasn't just housing and gasoline prices that were doing this, that was some persistent inflation also outside of those 2 volatile areas, then they said, it's just, time to not stimulate the economy and put more money out there. And so rates went up this week. Now, rates have been going up and down every week like a yo-yo. Now, they are at the highest point that I've seen in a while. So maybe a month and a half ago, with an investor with 25% down, we were at as low as 5.99, which was fantastic because we haven't seen that in a long time. Now it's about 6.49% for a 25% down loan. 30%, it goes down a little bit, but it's still higher. We were at 6.25 the week before. So a quarter point's quite a bit. 1/8 of a point is what we've seen back and forth. So it has an effect on cash flow. And so it makes life a little bit more difficult for us that when we're trying to find you a really great investment, understand that we're searching and doing a real deep dive into things, mainly because, if you're losing $200 or $300 a month, in negative cash flow and you're not rich, that can be a serious problem for you. And we're trying to avoid that. We are finding those investments, but they're fewer and fewer. And I'm going to talk about in another video, I'm going to talk about what the inventory levels are like in the Oklahoma City and Tulsa market and the economic impact of what's going on in those 2 markets. So, I'm not seeing a dramatic increase in inventory, certainly in existing inventory, but not inexpensive existing inventory. New construction is still way behind. It's way behind the United States. It's way behind in Oklahoma. And so that's going to keep those prices going. So don't expect interest rates to go down anytime too soon, but understand we still have some value out there in Oklahoma City and Tulsa. We can still give you something that is going to cover your investment.